wow, you thought you had a week. We almost had a government shutdown last night, but they were able to kick that can down the line till March, which is typical behavior. But it's going to be really interesting because come March, this is where we should start to see Trump's policies go into effect, what's happening with the tariffs, the debt ceiling, because we know the US Fed cannot get inflation down. We had members who didn't even want to do a rate cut this round, where Bank of England was the opposite. They kept their interest rates the same, and there was members that wanted a rate cut. US side, there are people who didn't want a rate cut. They still did the rate cut, but why did interest rates shoot up? Because we had economic projections. You don't get this every Fed meeting. And essentially, before there was projections that we were going to have 4 rate cuts. When the bond market sees that, they were thinking, okay, we'll see 2. So now the projections were 2 rate cuts. So the market's thinking we're going to see 0. On top of that, they increased their inflation expectation, and they don't think that unemployment is going to get where it's going to be, which means that it is stagflation. This is the kryptonite of the bond market, and that's where you saw the 10-year really shoot up. What helped give some relief at the end of the week was PCE, as it came in a little bit less than what the expectations are. And we're going into a long holiday next week with Christmas. Now, a lot of stuff is going to be very skimpy. The markets will close early on Tuesday. They're closed on Wednesday, and most people are playing hooky on Thursday and Friday. So reach out. This is a great opportunity to use these tools with higher interest rates to negotiate seller buy downs or to be offering incentives if you're a seller. The buyer, you want to be working with the seller to come up with creative options where it's a win-win. So reach out to learn more, here to help strategize, and I'll talk to you soon.